Hello guys and welcome to my channel. Let's get straight into the chart. Remember, I'm not your financial advisor. This is just for fun. Now let's start with natural gas. Um, if you look at the chart, this is actually the weekly chart on natural gas. The weekly chart is already closed. We closed above the 50 EMA, but we closed red. 1, 2, 3, 4, 5, 6th red candle, which is terrible. We haven't had that so far in this bull run, so this is just terrible to have these candles. I mean, terrible for the bulls. So it is telling me that it's not good to long natural gas. We had this. I need to go over to the daily chart, but before going over, I talked about this W pattern. The price target got hit. We broke out. I talked about this wedge, rising wedge, which was bearish, and I said that here, around here, we will start our way to the downside, and we will come to the bottom of this range. And exactly this is what happened. In fact, we fell below there, below that. And once we fell below the 20 EMA, we hit 50 EMA, and then we started to move back up. And here, we need to wait for a sign to start shorting a bull run, but we had the sign. Let's go over to the daily, and I talked about this head and shoulder pattern. The head and shoulder pattern is very bearish, and it's a very good sign for me to go short, because we can have a price target then. Let's look at it. Oops, just a second, something's wrong here. Let me try to move the chart. Yeah, something like that. Can I make it more? Yeah, here, something like that. So we have this head and shoulder pattern. As you can see, this is a bearish sign. Here's the neckline, and we can measure the price target. If I measure the bodies, only the bodies, the price target is down here at around 5.883. But when I measure the wicks, it's even below there. So it's possible that we come below $6 level, even down to around 5.6, and previous support 5.6, 5.5 levels. And of course, this would take days, because we had lots of days building up this head and shoulder pattern, and we started this move to the downside. We start shorting here with big short positions, but later only small positions, because we could have bull runs even as we fall, which we had here. And then we had, let me just put it aside, then we had this daily candle, which is very bearish, suggesting that we will continue to fall, and the bull run, this little bull run, might have ended. And this is exactly what happened. We have a red candle here, and I shared with you in my previous video that when we look at the 4-hour chart, even a smaller chart frame, then we saw a head and shoulder pattern, again telling us that this little bull run that we had, ended right here. So we started to go up, and then we have this head and shoulder pattern here. Here's the neckline, and we broke below the neckline and started our way to the downside. And right now we are at a little support level on the 4-hour chart, meaning 6.6, meaning that if we don't break down below there, we could have a run to the upside, maybe even to the neckline, 6.7 area, 6.75, 7, yeah, around that area, and then continue this downward trend. However, if we break down below this line or this level, then we could just fall down on the 4-hour chart to the bottom, 6.3, and even below that. And of course, we can measure the price target out of this pattern. Actually, oops, I can put the neckline there, and yeah, from the top to the bottom, and here's the breakout point there, or the neckline, And as you can see, out of this formation, the price target is 6.274. So it is telling me, this formation is telling me that we are going to continue this fall. We will fall below the previous low, below 6.3, and probably we will reach $6 level and go even below that level. It may not be a straight fall to the downside. We might have some bumps, like this was a bumpy road so far, but the general direction is to the downside. Let's go over to oil, WTI oil. And oil has been in a bull run lately. This is the 4-hour chart on oil, and if I look at the chart, I cannot say that this bull run ended. In fact, I shared with you that I had this bullish price target out of this W formation, and we even had a bigger W formation on the daily chart. 88, it was hit, and we even continued. Of course, out of this W formation, we not only hit the price target, but usually continue the bull run, and this is exactly what's going on. Now, I wonder what's going to happen at the $95 level. We might run up to 95 and then turn around to the downside. However, if we break above 95, we can stay above there. Well, then that's going to continue to probably to the 100 area. And if I look at the daily chart, yeah, then 97.5 is the next price target, and then the 100 $100 area. That's the price target of oil if we continue this bull run. And this looks very bullish to me. I don't see any signs of a trend reversal. So when I see that, I will share that with you. That's all for now. See you next time.